Hey, what's up YouTube? On this video, I'm going to share with you an update to my M1 Finance portfolio. Over the last month, I've done some things different. I've changed some things around a little bit, and I've learned some things that I really want to do going forward with my M1 Finance portfolio that I didn't really feel like I did when I first started or established my account. So I wanted to share what I've done with you and some of the changes that I've made. So let's take a look and see what I did. My name is Paris Clough, and this is Financial Self-Reliance. On this channel, we talk about the mindsets and the skill sets of the wealthy so that you can learn how to manage, protect, and grow your assets. If that sounds like the kind of channel and the kind of community you want to be a part of, go ahead and click like and subscribe so that you don't miss any of the videos that I produce. All right, let's jump right into my M1 Finance portfolio. All right, so M1 Finance is a free fin app that you can use to invest your money. It's a great app where you can put money in there. You can invest in ETFs, you can invest in stocks. It's great because it allows you to have the ability to invest in fractional shares. That's one of the reasons why I like it. M1 Finance has other benefits that are available to them. As you can see across the top, they have M1 Invest, that's their investment account. M1 Spend, which is like a checking account that they have available, which if you sign up for M1 Plus, you get to have 1% earnings on your checking account. And I don't know of any checking account anywhere that's earning 1%. The next one is Borrow, where they'll let you borrow money on margins or basically borrow money for anything. And then you have research here, and transferring is pretty self-explanatory, transferring money back and forth. And research, of course, pretty self-explanatory, where if you want to do research on any stocks or funds or anything that they have available in their portfolio here for you to buy or purchase or look at, you do the research there. So I wanted to share with you my personal account here. In this portfolio, I've contributed about $9,000. I try to dollar cost average in about $250 every time I do. So far, I've been doing it about every week, every other week. I may or may not continue to do that based on my income and based on how things are going with life. As emergencies come up, I may have to skip a couple weeks, but my goal is to contribute as much as I can, as often as I can into this account so I can continue to grow this account. My main goal with my M1 Finance account is to build towards my financial independence number. Now, I've made a video on how to calculate your financial independence number that I'll leave in the link in the description, as well as make a card available for you up above. But what I want to basically share with you is the financial independence number is the dollar amount that once you achieve that dollar amount, you can literally live off of 4% of that for the rest of your life into perpetuity, and you never diminish the balance to the point where you run out of money. So that's basically the idea of this particular account for me. In this account, what I've done is I've split it up into 6 different what are called slices. Now, my whole overall portfolio right now is one pie. That's what M1 Finance calls it. My whole portfolio is one pie, and I have 6 slices in that pie. And the 6 slices are ARK ETFs, dividend ETFs, indexes, REITs, which are real estate investment trusts, growth stocks, and growth stocks too. Now, when I first started my account, I got a little bit aggressive with my growth stocks. I wanted to be able to buy a bunch because you could buy fractional shares. I knew I could just throw a bunch on the list and just throw some money at it, and it would buy whatever percentage or whatever fraction of a share that I could based on the amount of money that I put in there. And then I started to realize that as my money was growing and I was moving along here, that my growth stock picks were some of the worst producing picks that I had made in this portfolio. The index, the dividend, and the REIT fund were doing very well. As you can see, they're the ones that are up right now. They were doing really well, so I wanted to allocate more of my money towards those accounts that were doing really well. And most people right now will tell you, if you're gonna really build a financial independence number, some of the best things to do is just to buy ETFs. Buy a fund that's basically going to give you the majority of the market. And that's where I was in this indexes here. And I have VOO, which is Vanguard S&P 500. Then I have VTI, which is the total stock market. So I have the S&P 500, I have the total stock market in the United States, and then VXUS is total international. So basically with those 3 shares, I own everything in the world, or a piece of everything in the world based on how the ETFs was invested. Now, I also put in here QQQ because that's basically the NASDAQ, and I wanted to have some exposure to that index as well. So these are my indexes, and I've got 25% allocated to each one. Now, coming back here, I've allocated 20% of my whole overall portfolio towards the ARK ETFs. ARK, as you know, is with Kathy Woods, who's done a great job over the last year and really been able to have some great growth. So I wanted to get involved with that. And so what I did was I put all 6 of her ETFs into this particular slice and created a pie with just the 6 ARK ETF. So I distributed that evenly so that I can have equal exposure to each one of the 6 ETFs that she has and that she manages. What I basically did this last time is I realized that there were some stocks that I had thrown into my growth stock 2 portfolio or slice here that I really didn't know and didn't do much research about, and they were losing 50%, 60%. And I thought to myself, the real reason why I put those in there is because I went off of the recommendation of other YouTubers that had them invested in their portfolio. and I realized I should probably do some more research myself to see if it's something that I want to have in my own portfolio and want to continue to have in my portfolio. And so honestly, I removed several of the positions that I had because I just didn't feel like those were the stocks that I wanted to have in my portfolio after doing a little bit more research and after really figuring out what I want to have and what I want to do with my portfolio here. The idea was to get my portfolio down to a lean growth machine so that I can actually feel good about the funds that I'm invested in and the stocks that I'm invested in. So I feel pretty good about it right now. I don't think I'll add or take away any stocks or funds right now. I think I'm pretty satisfied, but we'll see as time goes on, as I do some more research, because I'm going to continue to research the stocks that I put into these slices so that I make sure that I'm really owning shares of stocks that I want to own, and not just because somebody said they were a great share or a great stock to own. I have to admit, I did get caught up a little bit in the hype. What program do you use to buy and sell your stocks? Do you use Webull? Do you use M1 Finance? Are you using the new One Public? Do you use another one? Put in the comments below and let me know what program you're using. And if you're using M1 Finance and others, if you're using several of them for different things, let me know what you're using it for. I'd love to know what program you're using for your investments to get to your financial independence number. So as you can see, unfortunately, I have had a loss in this portfolio since I started it. I'm down $252, which is about just under 4%. I don't like that. I want to be up in my portfolio. Of course, that's the objective for all of us. And so I'm hoping to be able to, with some of these corrections, some of these changes that I made, I'm hoping to start seeing that growth and really seeing that the money that I'm investing is going towards those better growth funds and moving my portfolio and my account in the positive, in the green, a lot more than it's been doing with it being in the red so much. So what I wanted to share with you is I'm going to contribute $250 for tomorrow. And so I'm going to put deposit here. You click that, and then I'm going to click 250. And then I'm going to select the account it's going to come from, which is the checking account, the spend plus account that I have in here. And I'm going to hit continue and hit confirm. And done. So tomorrow about 6:30, they're going to buy $250 worth of shares based on the allocations and the percentages that I've placed here for that. I'll probably buy some ARK, some dividends, the indexes, and the REITs. Those are the ones that I've changed the percentages to have the most of the money go towards those, so that hopefully I'm having the best growth possible with my portfolio. So I just wanted to do a quick update and show you really fast what I've done of the last month with my M1 Finance portfolio. If you want to establish your own M1 Finance account, use the link in the description below and we both get $30. M1 Finance is a great way to get started investing. It's simple and easy, and if they're going to give you $30 for free, you might as well try it. Remember to click the like button and subscribe to the channel if you want to see more content on how to manage, protect, and grow your assets. I hope you have a great day, and I look forward to seeing you on the next video.